Well, happy Thursday, everybody. Stratton Mortgage back here again. Just dropping on some government loan stuff here today to give everybody a little bit better idea of how the government loans work. And there's a pretty big difference when it comes to the FHA, VA loans, and things of that nature. We'll, as usual, start off the inductions. I'm Tom Christie.
Bill Seach.
Adam Baumline.
So we were sitting in here kind of spitballing some ideas and what to talk about here today, and all came to the conclusion we've seen a lot of streamlining opportunity and how big of a difference there is, with FHA and VA rates. When people are looking around outside, whether it be retail, correspondent lenders, and us being wholesale, there's a big difference. Being one of our other guys that, a remote guy we have just was talking about another gentleman who was told a realtor said, hey, here, there's a company that, we like to use. The guy goes over there and he's trying to seek out to do a refinance. Come to find out, he is in a much higher rate than what he should have been in.
Massive, yeah.
He was a supposedly preferred lender there, or some people that knew what they were doing. And this is a veteran, mind you, and it is hundreds and hundreds of dollars more expensive. So again, it's a drastic difference. In some cases, when it comes to government, there's a lot more to it, but
it's prevalent right now because rates are down, and so if you have an FHA loan, if you have a VA loan, you're getting mailers daily. I mean, you are, you know what I mean? Because every lender is trying to get a hold of you because the process is number one, the process is easy. From a lender standpoint, it's easy, but from a customer standpoint, it's easy too, right? If you could lower your rate and it's beneficial and save money
with no documentation,
with limited to no documentation, it's a nice program.
And there is no appraisal for either one of them. So when you do a streamline, they're not doing an appraisal. So there's you essentially, if you're working with the right person, you can do that with absolutely nothing out of your pocket for somebody to prove that they're delivering that to you. So you can go through that process and not have spent a single penny. And say, okay, let's get it clear to close. Here we are. Did I deliver? If we didn't, don't close it. And with that said too, if somebody's asking an application, you
double
never
check that stuff with us too, because like with those mailers that are getting there, let's be honest, those are teaser rates. They've got buy downs and additional costs, and everybody's situation is different. Like we were talking before we started, recording here. Let's say it's a retired veteran that lives over by Right Pad. He lives in Beaver Creek, someplace over there, right? Hey, I'm in my home. I can reduce. I'm not going anywhere. Okay, well, it might be beneficial for you to, take that lower rate, maybe pay a little bit of cost, whatever, because you're not going anywhere. What if you're transferring out in a year? What do you don't know if you're going to buy or you're going to sell. Well, you don't want to pay those costs and finance that into your loan because that's taking away the equity of your property. You can refinance down at a higher rate than maybe what you qualify for. That might be the way to go. Now, everybody's situation is different, right? I mean, It depends. But we're going to go over those things with you where those companies are not, right?
That's where the advisor work comes in. Use a mortgage advisor, not just a big bank, right?
Yeah, a big lender. Yeah.
And I stressed to everybody just as important as closing a loan on time when it comes to purchase or things of that nature, structuring that loan and showing, here's an option, not just, hey, here's what we have, here's your 30-year fixed or 25, 20, whatever it is, and all right, let's get it done. There's other things there. And
if you're calling a call center from one of those mailers,
they're not taking the time to do it.
This is the rate, this is the cost you want to do it or no, because they're not getting paid very much on it, number one. Number two, they're trying to get as many as they can in. It's really turn and burn. Yeah. It truly is.
Here's a good scenario, and I try to compare it like this. If anybody's ever had a problem with their cell phone or you're trying to get a hold of a cable company, how dreaded is that call to that call center? And now that's essentially what these call centers are when it comes to dealing with your biggest asset and your biggest investment. You're a call center.
And your biggest debt. Most people.
You're a number. And and that's exactly what Adam says. We're going to show you different options, different ways to maybe if we did it this way, maybe I can help you knock 8 years out of your mortgage if you make the same payment on this right here. And something else we discussed too with us on the wholesale side. And a lot of people don't know this. At least from what I found, we don't have what's called a par rate. So there's either
because we can't keep that.
Yes.
If the rate, there's either typically a cost or a credit at every rate, and it changes daily and even multiple times per day. Some lenders will just round that off, and they might lose a little bit on some, probably not likely.
No, they're going to keep it.
Or they might keep the little bit extra, right? Well, legally, we can't do that. It's the same compensation level at every lender that we deal with, so we can't steer. So whoever is going to give you the best deal, if lender A is, maybe they give you $25 or whatever, but lender B is giving you $225. And they can get it done. It's all things equal. Everything else considered equal. We're going to go to lender. It's going to be because it's going to get you a better deal.
Yeah, and that's when we talk about these credits, that's money back to you,
to the customer. Yeah.
Yeah. So if you're your homeowner's insurance or setting up your escrows, like that goes to help decrease that particular cost. And it's
decrease cost, decrease if you are paying fees, if maybe it decreases the amount of money you have to borrow. I mean, it's
exactly
make a difference.
Yeah, and as long as you put that math together and say, hey, here's my payoff, here's my new loan amount. Our goal is to let's try to figure out a way to keep that as close as possible by still also giving you what you need and satisfying that need with this investment. So, I mean, it's
and explaining things to you and not. I've seen some lenders. Well, we don't have an underwriting fee for a VA loan. Okay, but your rate's 0.25% higher than what it would be. Yeah. So you do. It's like things are kind of misconstrued, and you see somebody sitting there in a suit and tie saying, "Hey, I work here because it's professional and they treat the customer right." And then you look at their loan programs and rate and fees, and it's dramatically higher. And it's almost like somebody's talking to you, but none of it's true.
Yeah,
yeah.
And it's what they really considers to be like the best of this or best of that compared to what and then like this, they're definitely not comparing it here because I'll tell you, working with realtors when there's other lenders out there and when I'm in competition, I mean 95% of the time I'm a better loan and I'm getting those. So then what happens is now all of a sudden those people stop trying to tell customers about me because they're going to the lenders that are paying them to get that next lead. So again, you might be a person that's paying for people's leads, and that's what you got to be careful of. Like, do your shopping. Look at the numbers,
especially with the streamline.
Yeah, and the streamlines are
things. Yeah,
to your point, these flyers are going out left and right. So I mean, like it's just make phone calls.
Especially if you've had your credit pulled right now, you're getting flyers. You're probably getting a trigger lead. Which you're getting a text or a phone call or something, trying to get hold of you, saying literally whatever.
Did you see they were trying to pass a petition to stop the trigger leads?
Yeah, they are. Yeah. Well, right now they're made it to where if it's a current servicer, it's not, so they won't.
And just to be informational, trigger leads is when someone pulls your credit.
The credit bureau sell that information.
The credit bureau sells it to several.
Not your report, but the fact that you've had a credit inquiry.
Right. Yeah. With usually a phone number. So when I pull someone's credit, I take their phone number off.
That don't matter. It's already the credit bureau.
Oh,
that don't matter.
Okay. Cell phones, really?
Yeah. It's all. It's there. I mean,
if any creditors ever, if you've ever given it to any other creditor and you've typed it in your app, dude, think about it. Why names are different, right? Like, hey, what's this? Why is your name Joe Seach? Somebody typed it in wrong.
Yeah,
it's in there. So So anyway,
information age, right?
We can talk about that next time.
Yeah, but the main topic again being these government loans, and if you do have an FHA or VA loan right now, streamlines are obviously extremely.
Everybody's trying to get
a great opportunity right now because rates are down, and with that said too, it is an easy loan to get done. It's very little efforts, and again, there's way more than one way to put those things together to satisfy that need. And
let us look at it for you because just because you're eligible, that doesn't necessarily mean. You should do it, or it's the best program for you. Just because you're eligible,
And my wife says this all the time. Not all lenders are created equal. Like, and there is a difference between retail, correspondent, wholesale. And nine times out of 10, I talk to somebody. Did you realize there's a difference between a wholesale person or a correspondent? Do you even know what that means? No, I don't. I just this person suggested to maybe talk to this person here or here, but. The feds lend money to everybody the same way, but how is that money getting distributed out to the consumer? That is different, and that's what you have to pay attention to.
Well, so we'll talk about that next time, and we'll talk about what lender names on the loan estimate.
Yeah, that's what we're thinking. That is, you're right.
So that's what we just talked about. So we'll talk about that next time, and that's a good way.
The whole thing is and anybody listening to this in Columbus has definitely heard this due to the 3C Body Shop. He talks about the insurance companies and the things that you don't know about. Like there's things that you don't know. Yeah. We do know, and that's what we're trying to share.
Explain it to you.
It's transparency. Yeah. It's just lay the cards. We play poker with our cards face up here, and that's what people respect about working with us, and that's what we offer.
Yeah. So if you got a streamline, you're not sure you've got an FHA. I shouldn't say that. I don't understand what that means. If you got an FHA loan, if you got a VA loan, you're getting a ton of solicitations in the mail. You're getting phone calls. Call us. Let us go over it with you.
Yeah.
We'll determine whether or not it's going to make sense or what the best option would be for you. And probably, like you said, 9.5 times out of 10, we're going to have the better deal anyways. Yeah. Which you can compare with them. We'll give you our information. You can compare it, and you'll. Yeah. It's pretty obvious who's going to be.
Visit our website, strattonmortgage.com. It's very simple, very user-friendly. You can see the whole team on there. Like I said, it's very interactive. So we're trying to help create things, too, that are just more user-friendly. Again, just trying to help, keep the public, knowledgeable of what opportunities are out there instead of just thinking you only have this route when there's definitely way more opportunities. So,
yep.
Cool.
Give us a call. We'll talk to you next week.
StrattonMortgage.com. Check out our website.
See ya.
Take care.